Okay, in terms of data, new data which has come through, and this is looking bright, is the data from CMIE, and they track infrastructure investment, new project announcements, the rate of stalled projects, the resolution, etc. On a monthly basis, they put this number out at the end of every quarter as well. And the data for the quarter ended December is actually looking pretty bright. New project announcements have increased sharply. The stalled projects have actually come down quite a bit as well. These are all year-on-year numbers that I'm talking about. But statistically, what is seeming like a turnaround, is it really so? Let's put this question to Mr. M.S. Unnikrishnan, who is joining us, Managing Director at Thermax. Mr. Unnikrishnan, thank you very much for your time, sir. Good to have you here. First up, from all of us here, wishing you, your loved ones, your team at Thermax a very happy new year. And it's a good data point to start the conversation with. Although there are caveats, there are two projects in that new project announcements which kind of has led to this sharp increase on a year-on-year basis, without which things would look pretty flat. But what is your assessment? Statistically, this does look pretty bright.
Prashant, you are right on the point that if I were to keep these two larger projects for Thermax, and if I were to look at overall capital goods industry, there had not been an improvement in the order intake across the board, and on the contrary, in the past maybe 3 to 4 months, there had been a steady decline in order conclusions. And despite various languages of green shoots being spoken, I don't think there is a generic improvement in the ordering out in the capital goods sector across the board. Not only in India, I need to say it's across the board all over the world.
What about, that is new project announcements, maybe the single most important sort of data point as far as that data deck which CMI puts out every year, and you're saying that, I mean, you're not spotting any green shoots whatsoever, not just here but not anywhere in the world. But what about the stalled projects coming down very sharply? Is that also a one-off? Is there also a few projects here and there without which things would look pretty flat?
Yeah, absolutely right. In fact, I mean, I would say the stalled projects are all taken over. Now, the consolidation is almost over in the power, cement and the steel industry. There I would expect things to be improving going forward, because since no new capacity got announced, barring very few in the cement sector, you will need to be having ordering out happening in all three of them. Now the question is, where is the funding going to happen? Which are the groups wanting to set up power plants in the country, either in the private or public sector, including NTPC? NTPC is very busy now complying with the NGT ruling related to the sulfur emission, SOx emission. That's why some of the orders that you're seeing. So once that is completed, there could be a possibility of the revival of the power industry in the next year. Cement, I think, will see improvement in the coming year itself. In the current year itself, there are a couple of ordering already happened and will happen further. Steel is the next one where consolidation should be completed with the, takeover of many of the standard assets. So I would presume that we are maybe 2 to 3 quarters away from starting of ordering for the core sectors. In the meantime, since the consumption has come down, demand has come down, capacity utilization has come down in the last few months, there is a wariness in the minds of the investors to be setting up new capacity. They're postponing the decision making at this juncture.
Okay, Mr. Unnikrishnan, I just wanted to touch upon that point with regards to capacity utilization, because the report primarily indicates that, there's been an increase in new project surges despite capacity utilization falling. In the RBI's previous December minutes, capacity utilization had come down to around 68.9% versus, say, around 73 to 74%. Can you give us a sense in terms of where capacity utilization for the industry stands? How does it break up between sectors, and where does it stand for Thermax in particular?
Well, I would say the prime sectors of ferrous metallurgy and non-ferrous metallurgy is tottering less than 60%. That is where the main concern is. Whereas the power capacity utilization is in 70s. In some sectors it could even be as high as 80%. But there the question is more in terms of the payments. The electricity boards are unable to be paying on time. So there it is a different kind of an issue, not a issue related to capacity utilization. However, when you come to FMCG and consumer products, the utilization is upwards of 75%, 75-80%. So it's only a phobia that is created. FMCG has come down. Yes, the growth has come down over there, but the capacity utilization, the existing capacities are quite decent at this juncture. Automobile industry is certainly very poor. Even white goods and durables are also at maybe in 70s. So that is where you get the complex number of maybe 58.5 or less than 60. And the main culprits over there are the commodities and the larger core sectors. Otherwise, the consuming sectors, there is a minor reduction, but not something substantial of the nature that you talked about for the core sector. Now going forward, since there are no more new capacities getting added in the next foreseeable future for the core sector, I would presume in the next maybe a 3 to 5 quarter period of time, we will go back to maybe late 60s from 58 to 55%, which should awaken many of them to say that, look, time has come for us to not start setting up new capacities. Unless otherwise there is a dumping of material going to happen from one specific country, which I think we have been successful in the last maybe few quarters and should continue despite what WTO may say. We'll have to protect our industry also, especially for steel. So that is my take on that. And on the consumer facing industry, it's a temporary phenomena because the money in the hand of the consumer has come down, and there are inflationary fears also, and the overall market is not very positive in the outlook. So which sentiment should be turning around? I would presume that it is a matter of time. It is not years together. So core industry, one has to wait for a year, and the non-core industry, the consumer facing ones, can happen maybe in a couple of quarters down the line for a reversal of trend to happen. It does not mean, both Ekta and Prashant, that India is going to recover totally. It will be sectorial in nature, not that all sectors are going to be investing.
Okay, but Mr. Unnikrishnan, just to take that point forward, how much of this recovery that we're talking about, whenever it would happen, maybe a couple of quarters down the line, would be pushed through by private capex versus PSU capex? Or do you think that PSUs are going to lead the front simply because private capex is going to have funding issues and maybe they'd be a little more apprehensive because of the receivables problem?
Ekta, in the current quarter also you would have seen, once the numbers are going to be spoken out, the ordering out had been far superior in the government sector. In fact, last year versus current year, the numbers people are talking in the industry is almost near to 1 lakh crore worth of additional orders got concluded. In fact, it is a dilemma for everybody as to where are the orders coming from. Well, there had been ordering out happening for the Balmer refinery and Gujarat refinery, and also I believe orders are already placed for the Vaishak refinery on a nomination basis, plus road projects which have concluded in the recent past. So the government and the PSUs had been leading even the last 1 quarter. And with the current announcement made by our finance minister of a very large number, I don't want to repeat, that number is too large for me to pronounce also, for that to be fructifying, I would presume in the next maybe 2-year period of time, the capex is going to be led by the government and the PSUs, not by the private industries, though in the consumer facing and durable industry and auto industry, whatever investment will happen, it will be from the private industry, but that will be dwarfed in comparison to the larger numbers being spoken for the public sector and the government investment. Railways will be investing. I would say they had been already investing. Smart city projects are getting ordered out. So you will see a surge of government spending and commitment in the next maybe 24-month period of time.
Okay, Mr. Unnikrishnan, thank you very much. Appreciate you joining us with your thoughts. A holistic view, not very positive or upbeat though, but there, not exactly completely downbeat as well. Needs to be watched. The data needs to be watched. The December ended quarter data from CMIE, as Mr. Unnikrishnan suggested, probably could be a one-off. 2 projects essentially in the new project announcements category, accounting for the bulk of the increase we've seen. There's news coming through from the courts. Tata Sons has moved the